Yes, people. Okay, so in this article, we're going to take a look at Bank of England and the warning around growing risk that the AI bubble could burst. Let's see what's going on here. Okay, the Bank of England has warned there's growing risk of a sudden correction in global markets as it raised concerns about soaring valuations of leading AI tech companies. Policymakers said there were also threats of a sharp repricing of US dollar assets. If the Federal Reserve loses credibility in the eyes of global investors, it comes as basically Donald Trump continues to attack the US central bank and threaten its independence. Continued hype and optimism about the potential for AI technology has led to a rise in valuation in recent months, with companies such as OpenAI now worth $500 billion compared with $157 billion last October. Massive difference there. Another firm, Anthropic, has almost trebled its valuations, growing from 60 billion in March to 170 billion last month. However, the Bank of England's Financial Policy Committee warned on Wednesday that the risk of a sharp market correction has increased. On a number of measures, equity market valuations appear stretched, particularly for technology companies focused on AI, that's artificial intelligence. This leaves equity markets particularly exposed should expectations around the impact of AI become less optimistic. Now, it is said investors have not fully accounted for these potential risks, warning that a sudden correction could occur should any of them crystallize, resulting in finance drying up for households and businesses. The FPC added, as an open economy with a global financial centre, the risk of spillovers to the UK financial system from such global shocks is material. Faith in the AI boom has recently been rattled by research from the Massachusetts Institute of Technology, which showed that 95% of organizations are getting zero return from their investments in generative AI. That has fed into the concerns that stock market valuations could tumble if investors end up being disappointed by the progress of adoption of AI technology. The FPC said this could drive a revaluation of currently high expected future earnings. It added material bottlenecks to AI progress from power data or commodity supply chains, as well as conceptual breakthroughs which change the anticipated AI infrastructure requirements for the development and utilization of powerful AI models could also harm valuations, including for companies whose revenues expectations are derived from high levels of anticipated AI infrastructure investment. The committee also said that Trump's administration continued threats against the US Federal Reserve were putting financial stability at risk. In the US, there has been continued commentary about Federal Reserve independence. A sudden or significant change in perceptions of Federal Reserve credibility could result in a sharp repricing of US dollar assets, including in US sovereign debt markets, with the potential for increased volatility, risk premia, and global spillovers. It said these added to the impacts of Trump's trade wars, with the FPC said had not yet been fully realised. There you have it, folks, a warning from the Bank of England that the AI bubble could burst and that could have a financial impact across global economies. Do let us know what you think about that in the comment section below. Are AI companies overpriced? Don't forget to like, share, subscribe. Catch you on the next one.